Greetings Inderes TV viewers and listeners. In this video we're talking about Aiforia Technologies as an investment, one of the few artificial intelligence stocks in Finland, interviewing analyst Antti Luiro, who has done great extensive report with our analyst Frans. I recommend you to read the whole report. I put the link in the description below. Antti, first question. When we are talking about extensive report, I think it's safer to start with simple but important things. What is the huge problem in the world Aiforia is trying to solve?
Yeah, so Aiforia is a software company focusing on healthcare diagnostics. And the problem that they're focusing on is related to cancer diagnosis and treatment. So in the world, of course, we know the population is aging, and with age, we unfortunately get more cancer incidents as well. At the same time, when we do the treatment and we diagnose those cancers, we take tissue samples, which go to the pathologist's labs. Basically, it's the doctors who look at the samples and try to figure out what kind of cancer is it. The challenge is that the amount of pathologists is not growing, and they're already overburdened with the volumes of diagnostic work that comes from the cancers. So we have a mismatch between what we can diagnose and what is the need going forward, and it's already a problematic situation because of the balance. So what Aiforia does is that they make the diagnostics more efficient. So usually the pathologists, they look at the slide which has the tissue in it, calculate different, for example, number of cells and the division of how many cells are cancer positive, how many cancer negative, and then they make the report which says what kind of cancer is it. So what Aiforia does is that they replace the pathologist's eyes in a sense, that they do image analysis, they recognize what are the cells that are on the slide, what are the cell counts, and then they generate these figures directly for the pathologist. So when the pathologist looks at the slide with Aiforia, they see what the software found on the slide, what are the calculations, they can check if they agree with the diagnosis, and then they can put it forward. And it gives them efficiency, but then also consistency, because different pathologists might have a different view on the different samples, and sometimes you might even get a different result from the same diagnosis. So with the software, you can help get more consistent diagnosis for the patients.
So to simplify even more, Aiforia does tools for pathologists with enhanced with artificial intelligence, just to them to be more productive at work.
Exactly.
But how does Aiforia actually make money?
Yeah.
I think that's important for
for businesses.
Well,
so to put it in a simplified format, basically Aiforia makes money for each analysis that is made with their software. So if you take one tissue sample from a particular cancer, you typically calculate 1 to 10 different things from it, which converts to 1 to 10 image analysis models from Aiforia, which recognizes a specific thing on the slide. And every time Aiforia's software is used to calculate these things, analyze the slide, they get revenue from it. And right now, what the management is estimating that they would make 5 to 10 euros per sample analyzed. And when you put this in volumes, for example, Mayo Clinic, which is a large customer of Aiforia's, they handle around 2.5 million tissue samples per year. So if you convert this to the 5 to 10 euros revenue per year, then you get around 10 to 20 million euros per one large customer of revenue. Of course, there's many kind of smaller fees also involved, like just having the platform, and a lot of this is recurring software as a service type of revenue. But basically, how much the customer uses Aiforia, then they get the recurring income.
Well, I bet that the market is huge. If, as you said, the trends, more cancer in the world, maybe 5 to 10 euros per image, if one can say so. But usually when there is a large growing hot market, that also brings in competition. You already mentioned a very important client reference, Mayo Clinic. But what other references does Aiforia have, and why should customer pick Aiforia instead of other competitors?
Yeah. So there's definitely competition, and the market potential is looking out to be several billion if we think of it globally. So competition-wise, of course, it's a new market, so it's tough to make any definitive calls on who's the strongest and who's not. But I think the clearest signal is Aiforia's customer wins. Mayo Clinic, world's best hospital, actually, not just US, but the world's, also ranked this year. Super good reference, pretty much the best you can get in the clinical side. Then they have NHS, National Health Service in the UK, and a couple of healthcare provinces in Italy as well. So these tell something that, you know, these are tendering their providers and Aiforia has been picked. But why has Aiforia been picked? So there's a couple of angles I think are contributing to their competitive advantages. The first one is that they're focusing on recognizing the different cells in the slide images. So if you think of it this way, the pathologist needs to make their report and they need to be accountable for what they say is their kind of read on the report and the kind of tissue sample that they have. So Aiforia is able to give them exactly the numbers and the visibility that they need. How many this type of cells did you find on the slide? What is the ratio? And if the ratio is above this percentage, then you have a diagnosis. There's players in the market who do kind of image level analysis. So they just say, is this cancer positive or not, this sample? And then for the pathologist, they're like, okay, so this is cancer positive, but why is it cancer positive? So then they need to go to the slide and do the calculation anyways to be able to be sure that this is their diagnosis. So this gives Aiforia an advantage. So you actually make the work more efficient. You just don't just help them prioritize the slides based on which one is looking more urgent. So that's one angle. And the other one is the way they've built their product and how you build the image models. So with Aiforia, a pathologist or somebody who doesn't have technical expertise can build their own models. So Aiforia already has a global customer base in preclinical side, which is basically medical and drug research. And the pathologists there, they can just mark the areas in the slide, and then the image recognition model starts building. So then they can make up new use cases and they can develop the models on the go. Some other competitors have gone into kind of an algorithmic type of image recognition, which means that there's some developer that's figured out what kind of heuristics can find the right cell in the slide. And this is fine as well. You can actually get pretty much close to similar results with either approach. But if you do it in a way that it has to be the technologically adept person doing it, then you have to wait for the company to make all of those different models. And I mean, there's over 20 different cancer types in the world or categories, and each one of them takes 1 to 10 different image recognition models to be able to cover them. And then you have the full field of medical research where you can calculate those other things, not just cancers. So if you're a customer and you want to get big coverage with the software so you can be efficient in all of the use cases you have, it's super slow if you are not able to kind of develop the models yourself. Or if you want a higher accuracy, then you can't change the model if it comes from this kind of algorithmic type. So Aiforia has been quite smart there as well, being able to give the pathologist their room to develop the models themselves. And that being also said, since Aiforia is strong in the medical research side, they also have these people who use the product before it goes to the clinical side. They like it, they know how it works. And then when you go to the clinical discussions, you already have these people who might be in touch with the clinical side personnel. So you have already people who vouch for your product when you go to the large clinical market, which is the kind of big part of the pie in the entire market because there's such large volumes. And going further, I notice I'm getting to quite a few points here, but
they sound good points.
Yeah,
please continue.
Yeah. So then there's also the value of Mayo as a strategic customer for Aiforia, because Mayo has been able to create a predictive model which predicts how colorectal cancer is moving onwards from the point of diagnosis and how do you treat it. So this is only possible because they can calculate 15 different parameters from the image just to understand what kind of sample you have at hand. And then they've connected this to patient outcomes and how the cancers have progressed since. So with Aiforia, they can figure out how long of a chemotherapy period they give the patient. And they can save even a couple of months of treatment, which is $10,000 per month, and give big savings. Also to to the medical bill, but also just to help the patient not go through that sort of agonizing treatment. And Aiforia is the only one who has that kind of a model, and Mayo has licensed it to them. And there's a big team at Mayo Clinic that are using Aiforia to develop further models. So they've sort of become a strategic R&D hub for Aiforia, giving them models that not only help make the process of diagnosis more efficient, but also help make the treatment better, because a bit more about how the cancer is proceeding. So a couple of angles, and again, like I said in the beginning, I think many of these things can change on the way, and the best sign of competitive advantage, I think, is the customer wins. And Mayo Clinic being a very, very good reference for Aiforia, I think it looks like they're in a good position.
For now, how sticky is this business? Just thinking that now it seems that Aiforia has some competitive advantages, but let's say in the next 5 years, because Aiforia has to make a lot of money in the tens of years to come. So how fast can the competitive landscape change?
Yeah, so I think when you have won a customer, you're sort of in the customer. What it means is that you've integrated your software to the image management software. It goes to the patient record data. It is kind of connected to the slide scanners that scan the physical tissue samples into digital.
So there's high cost to change.
Yeah, I mean it's a very factory-like environment when you have a large pathology laboratory. So you don't want to change the process unless you really sort of have to. So from that point of view, Aiforia already has their kind of small, but still in this kind of part of the market or early stage of the market forming, still a significant foothold. I think they're going to stay in these customers. And then the question is, if they keep their technology in a good shape, etc., they should be there for a long time. But then we have, of course, the rest of the market and who wins the other customers. And this is sort of game of who's running the fastest and who's in the right conversation and who's able to deliver software to all these cases as the market is forming rapidly. And there, it's interesting to see how it goes going forward. Of course, Aiforia has so far won very, very good cases, so that would indicate that they're in a good position. But as mentioned, it's a market at its young stage. So in the COVID pandemic, this sort of digital transformation in pathology started when you had pathologists who couldn't come to the lab because they were a bit sick. So what do you do when you have all of these tissue samples in the lab in a physical format, and you would need to look at them with the microscope, which was a very kind of old way of doing it. So then they realized we should be scanning these in the digital format, and then the pathologist can do their work from their home if needed, and from the screen. So it's essentially the same thing you're doing. Are you looking at the sample from the screen or physically? And that has also helped Aiforia to go in the market, and other image analysis tools to go in the market when you have a digital version of the sample available.
Exactly. To run faster in business, you need, of course, good personnel and good luck, but also fuel, which in this case is money. In the medical space, when we talk about these companies that are in the very early stage of their growth trajectory or growth story, there's a huge risk of dilution because they have to gather more money from the market. So you have said previously that Aiforia still needs at least one round of financing to get more money for growth. So is there a huge risk for dilution for present owners?
I would say not a huge risk. Of course, it exists. But if we look at the position Aiforia is in right now, so roughly we think they could raise maybe 20 million euros to get to the cash flow neutral state. And with the current market cap of 90 million, we're not talking about the significant dilution. Of course, if something happens with the valuation, that can live, and the dilution level can vary. But thinking of how Aiforia has progressed with their growth, the customers they won, the way they've been ramping them up, I think it would be surprising if they weren't in a good position to do the raise. And the company, of course, they now said that they're looking into different options. So it can be equity, it can be debt, it can be public grants or other sorts of aids. So we expect that they go full equity, which I think is the I guess the most negative option for the shareholders. But we like being conservative. Even with that, when we think of the different valuation levels that the raise could happen at, it doesn't significantly affect the fair value. So we have a couple of scenarios in the report. You can take a look at them, but it's, if I remember correctly, around 4 to 4.4 euros per share is the difference if the share price would be 35% lower in the raise that the company would do. So I don't see a big risk here, but of course, if something happens with the growth and they start going the wrong way with their strategy execution, things can change. But right now, I think they're in a good position to get that money, and they're not too far away if we think of years towards cash flow neutrality. So from that point of view, it's also not impossible to see them raising debt or taking kind of like debt-based financing after equity raise. So good position, I think. Risk is there, but not too major.
Exactly. Lastly, very important question. As it should be now obvious to the viewer that this is a high reward but very high risk investment. And there's a proverb that it's better to have one bird in the hand rather than 2 or 10 birds in the bush. And I would say that let's think about some very stable Nordic companies like Sampo, Nordea or Investor. They are a big fat bird in your hand. There shouldn't be not much surprises, not much upside, but neither not much downside. But Aiforia is like those birds in the bush. If you get them all, this will be a very good investment. And if those birds escape, well, you don't have nothing because there is no tangible assets in the business. So it's zero or something much better. So how would you approach Aiforia as an investment? Is it a good investment case? Now the market cap was 90 million euros. So if everything would go right, would the investor go to very early retirement or not?
Yeah, if everything went right, yes.
Well, that's all I need to do.
Depending how much you need for the early retirement. But using your analogy about the birds in the bush versus in the hand, I think Aiforia has a couple of pretty good-looking birds in the hand. We don't know how lively these birds are yet. So they've obviously won a couple of really big customers. And if I think of the revenue growth 1 to 3 years forward, I can already say which customers that would come from. So it's not the question of they need to figure out how they win new customers and they need to win them and ramp them up, but it's rather you want the existing customers to kind of keep extending the use of Aiforia's software, which they have already been doing. Of course, longer term, you need to win more customers as well, but we have not seen any signs of sort of that momentum going down. So yes, the downside is there, but also I would be very surprised if the company would sort of completely flatten out with their growth based on the current trajectory and their position in the market. Yes, in the price, there's quite a bit of expectations for the company to be successful, but not in a sense that they would need to be the sole winner in the market. So right now our estimates, they go beyond the 100 million euros revenue target that the company has over a long period of time. But thinking of the market size, we're still talking about the several billion euro market. It's still just a small portion of that market, right? So there is room for other competitors to come and take parts of the market. So even though we see Aiforia in a very good position to be even the leading player in the market, they don't have to keep that position forever for this to be a good investment. They do need to continue the momentum for now, get a good kind of early position in the market and get towards cash flow neutrality. But there's still quite a bit of potential that hasn't been priced into the stock. And I think it makes sense. It's always a balance of how much you see in the future, how much potential you price in based on what you know today. And we know something. We know that it looks very good. The company has been executing very well. They reached their short-term targets, which gives them a bit of credibility also in terms of when they talk about winning more customers in the next 2 years. I think they have a plan, goal of 10 new clinical customers. They had 5 before from the last 2 years. So there's something tangible behind it, I would say. And the comments from the company in terms of how the sales pipeline is looking have been very positive. But yeah, anything can happen. And that's the situation with these early stage companies. If the growth doesn't pick up and they keep burning money in this investment heavy early phase, are they going to need further amounts of financing? How much are the existing owners going to be diluted? if you were thinking of making this your sort of pension money with this investment, if that happened, then of course you would be diluted out and you wouldn't own as much of that future potential, so even if they got there.
So this is not the stock where your grandmother should put most of her savings.
Yeah, I would I would put it this way, and as is the case with all early stage companies, you need to be willing to accept that there's a possibility that you lose your investment, even though it looks good. And I would be surprised based on what we see right now if this happened. But still, it's good to understand that it's very hard to forecast how the business is going to go forward. I mean, Aiforia can do their part; they can win the customers, but then for the customers to ramp up the use of Aiforia's software, it takes time, and Aiforia can't fully control it. And then the regulators might take more time to get some of Aiforia's new image recognition models approved to the market. And that could limit how fast Aiforia can grow the existing customers they have. So there are risks there as well. But if you're willing to look beyond the short term and look at the trajectory the company is on over a long period of time, I think it can be argued that it is a very, very attractive investment case. But of course, we don't have a buy recommendation right now, so there are risks still, and we would love to see more visibility and more signs of the growth and getting more confidence in the estimates. But there is certainly some confidence right now already, so that's a good thing.
So is this like let's see more accumulate recommendation right now?
Yeah, exactly. And I mean, our scenarios for the valuation go from around €1 per share to €7.5 per share. And with target price roughly in between at 4.2. So there is a big range over there. So even though most of our methods fall between the 3 to 5.5 euros per share kind of range, and the stock is now at around 3.5, I think, there is a wide scale of scenarios and outcomes where this could go.
Thanks, Antti, for very deep and good comments. Gave me a lot of new thoughts about the company. I recommend you to read the whole extensive report, as I said in the beginning, and please join our forum to discuss Aiforia as an investment more. At this point, I'd like only to say that read analysis and make good stock picks.